Good morning, welcome to the Market View for Thursday, the 24th of July 2014. Starting off with the 30-minute chart, we can see that we had a potential buy signal here at 8:30, but keeping in mind that we had the MPC, the Monetary Policy Committee, announcement at 9:30, we can see that the market traded sideways for the next half an hour, very tiny trading range there, and then the market moving higher to fill this potential trade. But of course it's a high impact Bank of England monetary policy announcement, which is not a good one to actually be in the market with. So we see the market filling this one and then giving a sell signal, and this was filled at 10:30, and the market trading sideways to lower all the way through until we get to around 12:30, and then of course at 12:45 we had Carney speaking. So the maximum potential available on this trade was 10 pips, and of course this one shouldn't be taken because it was the high impact monetary policy economic news there, the votes from the committee on whether to raise rates or not. And you can see how this was used just to move the market higher, and then of course you see the selling coming into the market and prices thereafter moving lower. After Carney spoke, which was incredibly lackluster there, you can see that the market's reaction was very, very small indeed. We've got from the low here to the, whoops, I'm drawing the right place. From the low to the high there, we've just got 27 pips during his announcement there, which isn't a lot at all, and then the market's been stuck in this sort of 10 pip range for the remainder of last night and the overnight session as well. So again, just very, very quiet. And the daily chart, of course, will reflect this, although we do see that we have 1, 2, 3, 4, 5, 6. This is the sort of seventh one that's building at the moment. 7 days there of the market just sort of grinding painfully slowly to the downside there, heading now towards the 170 resistance area, well, support in this case, but of course it was a resistance in the beginning of June, and now the market's taken that out, and since the market's just been grinding painfully lower there, just down to where more or less it got through when we had this major psychological level of 170. So the market not doing a lot, just say this painful move to the downside. We suppose we could expect some support anytime now. To have sort of 6 days straight in one direction would mean that the law of averages, we are due a green candle in this market. So let's just have a look at this. We've come down from 171.50 down to, so it's 100 pips, just over 100 pips really, in a matter of 6 days, which is just incredible. Very, very quiet, and unusually quiet, and I suppose going into August isn't going to help things unless we have a situation like 2007, 2008. In August of those years, we had a very lively month as well. So you can never forecast, and again, the run-up to there was very quiet also. So again, you never know, but certainly the market needs a kick from somewhere to spark some life back into it. In the news for today, let's just have a quick look through, see what we've got. We've got some news from the French there at 8 a.m, and then German news. And the UK, we've got retail sales at 9:30. They're forecast to show a bit of an upturn there, so you could see a bit of a spike to the upside for two reasons. As I say, we've got 6 consecutive down days in the daily chart, and law of averages says that we could see a spike to the upside, so I wouldn't be at all surprised if this doesn't do it for the market. But of course that's as long as the forecast or the actual figure is better than the forecasted figure once it's released. The US, then we've got the weekly jobless claims, and then we've got new home sales at 3 p.m. So not too much news around this morning. So just watch out for that retail sales one at 9:30. You could see a bit of a spike to the upside, and how long that actually moves the market to the upside will remain to be seen. And again, it may be used just to suck people into the upside and then reverse it and move it back to the downside. It's a well-known tactic. In the Dow, the market traded sideways. In fact, it was that quiet yesterday. The Dow traded also in a very quiet range of around 30. Let's have a look from the high to the low. 21.58, 37 pip or point range there for yesterday for the Dow as well. So a very quiet day on the stock market as well. So I suppose the market at the moment is waiting to see what is going to happen with all of the to and froing with Obama blaming Putin and so on and so forth. All of the propaganda machines are in full flow at the moment, so the market's taking a bit of a breather, which we can see for the last 4 days the market's stuck in the sideways range there. In the implied volatility, this moved up slightly yesterday, 951 and 722 for the historic, and you can see this reflected down at the bottom there. So really not a lot else to report. Again, brief and to the point, because the markets are so quiet. So it's a case of sitting on our hands and waiting for the market to explode and actually create some sort of volatility, which it is due for. But it's just unfortunately, I can't tell you which day it's going to be, as anybody else can. So it's a case of just riding out the quiet time. Right, all things being equal, I will see you in tomorrow's market view. As ever, thank you for your support. It's very much appreciated, and also for watching. See you in the next one.